Hello and welcome to Crux Investor. We caught it right today with Michael Jones. He's the president and CEO of West Kirkland Mining. They're a TSX-V listed gold developer with assets in Nevada. Quite an interesting model, unconventional and confident one. And if you're a gold bug and you don't mind waiting for higher returns in a positive gold environment, this might be the one for you. So if you want our thoughts and opinions on the conversation, topics discussed, the company itself, and indeed the business model, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis. There are commentaries from experts from around the world on a variety of commodities and companies, really insightful stuff. Training courses to help you with your diligence process, summaries of other interviews that we've done to save you some time because we know you're busy. And if you want to join a thriving community of investors sharing all of that content with each other in a nice, friendly and safe environment, you should join them at cruxinvestor.com/club. You will enjoy it. And we appreciate your feedback too. So do give us a like, leave your comments below. We get back to everyone. And if you want to see precisely what we talked about today with Michael, take a look in the description below. Michael, how are you doing, sir?
Great to be on.
Well, thanks for joining us all the way from sunny Johannesburg. How are things down there?
Very well, actually. Things are improving as they are, I think, around the world.
And why are you there?
Well, I have two jobs. I work for Platinum Group Metals, but what I want to talk to you today about is about West Vault Mining and the gold in Nevada. So I'm CEO and co-founder of West Vault, and we're at quite an interesting point with the company. And gold, of course, is starting to move back up, I think.
Right. Okay. Well, let's get stuck into it then. Why don't you give us a 1-minute overview of what you've got there, and then I'll pick it up with some questions.
Sure. Well, West Vault, as the name implies, is gold in the vault. So it's gold sticking out of the ground in Nevada. It's just under 1 million ounces of resource. It's got a proven and probable reserve that's ready to go into production. So very unusually, it's actually a fully permitted reserve of gold in 2 pits that investors can very inexpensively get exposure to safe, secure gold in Nevada. That's the story.
Okay, fantastic. So how long have you been at this? When did this start?
I think we started when Christ was last in Chicago. It was a really long time ago. So we've been at this for about 10 years, actually. And we acquired the property in a distressed situation with a company called Allied Nevada that some investors might remember. They got into trouble in a project in northern Nevada. And we set out in a very dark period of the gold market to actually look for a project that had a 20% internal rate of return after tax at $1,200 gold. That was our requirement. And we identified this project as very attractive because it sticks up out of the ground. The problem with it was it wasn't for sale. So we didn't let that deter us. We actually bid for the property, and the owners at the time told us that was an insulting bid and they never wanted to talk to us again. And we knew we were on the right track then. Of course, when you make a bid for a property, the last thing you want is somebody to say sold to you. You want them to tell you to get stuffed, which they did. And we kept pursuing it until they were in deep, dark trouble and we were able to buy the property. So we've taken a number of steps over the years to redo all the feasibility study work, redo the resource, redo the mine plan, do all the permitting, buy out the royalty, consolidate the ownership 100%, and now it's ready to go into construction.
Right. So how much money have you spent on it to date, including the recent raise?
Altogether compiled, we're about $20 million, including the purchase.
Right. Okay. It's not a lot, not a whole bunch of money for something that you're talking about being production ready. So if I look at the share price, you're either whatever, 67, 70 million bucks, there or thereabouts. Markets come off of precious metals. Your chart kind of follows that, maps that precisely.
Yes.
Yeah. So what do you do? How do you get out of that?
Well, listen, I think that the gold market will turn around. I mean, our shareholders are interesting in that 70% of our stock is owned by our top 5 shareholders. 46% of our stock is owned by the Sun Valley Gold Fund. They're very long-term, stable believers in the price of gold. And, they believe we will see a new secular high in the price of gold over $2,000. And that's the point at which we look at putting it into production and returning capital to shareholders. So this is quite a different gold company than your standard junior gold that's exploring and hoping and risking dilution and share capital against the next drill hole. This is a very staid, conservatively managed reserve of gold with some owners that have, incredible staying power as does the company. So this is for somebody who really believes in that next move in gold and wants to put it away.
So talk to me about that 2000 number. You're saying you need to wait till it gets to that point before this thing starts getting
that's an interesting question, because at $1,800 gold, the project has a $300 million net present value, 5% discount rate after tax, and a 92% internal rate of return. And that's at $1,800 gold. Having said that, given that it's just 1 year for construction and you're in production, our shareholders really want to maximize the value of that gold by putting it into production at the right time as gold establishes that new high. So they've got quite a different strategy, I think, than other folks, where a 92% internal rate of return doesn't impress them.
Yeah, I mean, it's a strange one. Don't you feel? I mean, you're comfortable with that?
Absolutely. 100% aligned.
Right. So, but there's a cost of capital. If you're sitting around waiting for the next 2 years for that to happen, the cost of capital surely prohibits that kind of thinking carrying on.
Well, cost of which capital? So that's another interesting component of the story. So, our shareholders have, first of all, been super supportive. So to them, equity is not dilution. It's just chipping up their pro rata share, number one. And so there's no dilution to them per se, because they've just matched pro rata. The other thing that we did that's unusual is that we bought out our private partner, Waterton, in a very accretive deal. So they realized with a 25% interest that it was going to be hard to sell it to somebody else, given that we control the project. And they agreed to a transaction where we bought it out at our market cap rate. So we actually bought, for $11 million, we bought 25% of the project at that time. And it was a $72 million NAV. So that was a super accretive transaction. We also bought back a royalty from Newmont. There was an exploration piece of ground that they coveted in northern Nevada, and we traded that for a 1.1% NSR over our own property. And at that point, we only owned 75% of the property, so it was separate. And just recently, in the last couple of weeks, we completed a transaction where we effectively canceled that royalty and created the equivalent in a stream, thereby not adjusting the project economics. And we sold that to Sprott for $7 million. So, the company has about $8 million in cash, US. And the other unique feature of this company is that we've ground the holding costs of the entire public company, land fees, claim holding fees, public company audit, everything down to under $1 million Canadian a year. So with our current cash position, we can last something like 9 years and not issue a share. So again, that conservative way of managing this net asset value and gold in the ground is something that's a philosophy of the company and a reason for investors to own it.
Okay, no, I appreciate you explaining that. There are a few terms attached to the streaming, the 6 plus 1 plus 0.3 component.
Yes.
Understood.
Correct.
But it's a very, like I say, it's a very interesting way to look at a junior mining company, which are usually desperate to get into production as quickly as they possibly can. That said, can you just tell us a little bit about what you'll be doing if this thing gets into production? What sorts of numbers are we talking about? You explained the NAV, NP5 numbers, but how much are you producing or hope to be producing?
Sure. So recovered gold, in bars at the end of the day, it's 70,000 ounces a year on average. And it produces for 8 years. So roughly 560,000 ounces recovered. And that doesn't count the Hill of Gold, which is a deposit we just bought out to the rights to, which adds another 40,000 ounces in non-compliant resource. Doesn't sound like a lot, but given that it just goes right onto the Three Hills pad, which is fully permitted and right next door, that could add another $30 to $40 million worth of profit to the situation. So again, when you're super focused on return of capital to shareholders, those small incremental additions actually become quite important, especially when you look at what the company is trading at.
Okay, so given that model, explain to me, will the idea be to sit there on this cash until the market, the price of gold hits a number that you're satisfied with, or do you spend some of it on exploration and again follow a conventional path to creating value, or are you going to be completely unconventional the whole way through?
Right now, we're completely unconventional, so we're super conservative. We're a reserve of gold. That's our corporate approach. It's in our name. And we have spent a fair amount of money on that previously on the property and exploration. So also probably pretty unique in that we're the only junior gold company that's ever going to admit that there isn't massive exploration potential here. We've spent the money, we've explored for it. Yeah, wow, right? This is like new territory here. So we've looked for a place to go double those reserves, and we don't see it. So we do see potential in the root of the Hasbrouck pit, but we won't be there for 8 years, and it's very expensive to drill that from surface. It's because it's the root right underneath a hill of gold that you're going to mine. So we will get there, we will mine it, but there's no point in spending $150,000 a drill hole to prove up to something that we will get to anyway, especially when you'd issue shares trading at 0.2 times your NAV or less. Why would you do that? That's net dilutive to return to shareholders. So we're not going to do that. We're going to wait until we're closer to it. We can get at it from the pit and we'll go mine it. And we'll return that money to our stockholders. Sounds like a business, which is, in gold, weird. So there you go.
It doesn't sound weird, but it does sound unconventional. So I'm intrigued by the degree of honesty about this. But I got to ask you a question. Do you think the market understands this? I'm judging by the questions sent in, not so much.
Not yet. I mean, listen, we've got a slide in our presentation that shows that the NAV at $1,800 gold is $5 US a share. We're trading at $1 Canadian. So clearly there's a disconnect, and we have some work to do to find those investors that actually want to look for value. There's lots of people out there selling upside and dreams. This is actual real value and gold. And we do think, though, that as gold starts to come into focus, people will say, where is their value? I don't think that question's being asked a lot because people are a little uncertain about gold right now. But we did see our share price get up to $1.90 Canadian. It was started to move, and we're half that now. So we've lost some of the shareholders, obviously, that have lost their faith in gold. Fair enough. But as that faith returns, we do think it will very quickly be seen as a significant value play against others.
Well, okay, it's either lost faith in gold price or lost faith in your business plan, right? Because they don't understand it. So let's try and help them kind of get there, because does liquidity matter to you if there's no growth story?
Well, liquidity is always important to investors, and I think it's important to achieve a multiple. You need some liquidity, so it is something that we need to work on. We need to do more things like this, where we get the word out about the company and its value. And we're conservative, and it's a different story, but it doesn't mean that we can't tell the story and get some increased liquidity. So I think that is something we can work on as management and a board, and we do have some plans to do that over the next 6 to 12 months. It's in our annual budget. But again, don't expect us to go spend $500,000 or $1 million a year on promotion. That doesn't fit with our business strategy. So it'll be modest, but I think a modest amount of exposure can change the valuation by creating some demand for shares. And when you look at our share structure, there's over 70% of our stock is well held by senior institutions.
Right. So given the model you've described to me, this is one sort of giant ATM, by a cash machine. I'm not quite sure what the phrase is in North America. It's not necessarily a growth story unless you do something like M&A and employ presumably a similar type of model. So is that going to happen? So
that's an interesting question. So again, it goes back to assessment of value and whether a deal is accretive or not, right? Real accretion as opposed to the story. And it's very interesting when you do that. Obviously, with this sort of setup, we've been approached many times. And as you get approached, there are two major problems that come very quickly into focus. The first one is, what's the stage of the project that's proposing a merger and an M&A deal? Oh, they don't have all their permits. Okay, well, let's assume we can get over that, but it's a really good project, right? Well, wait a minute, it doesn't have a 92% internal rate of return. Okay, well, it's got lots of growth. Okay, well, now we're betting on exploration again. Okay, well, let's see what they're trading at. They're trading at 0.6 times their NAV, and we're trading at 0.2 times their NAV. So to get anywhere close, they've got to pay 3 times our share price. And that's the second problem is it's very hard to find somebody who's got the guts, even though the value is there, that's willing to do that. So there's a lot of structural impediments to actually the M&A idea if you're not just focused on a story, but you're focused on real value. And that's where we are. So far, we have not found a fully permitted project with a better than 92% IRR that's trading at 0.2 times NAV. If we find one of those, we'll probably be super keen. And that's the exact reason that an investor should be interested in us, because those are really hard to find.
Given the scenario that you've described, I mean, you could argue that perhaps they've got it right and you've got it wrong.
Well, in the short term, sure, but eventually the chickens come home to roost, right? Which is like there is real money involved here when you actually build it and produce. So eventually, good stories rise to the top, and this will. I mean, if we have to build it to prove the point, we can do that too. I mean, I've produced gold in Nevada for 6 years. I bought out the private partner 300 kilometers down the road. I've been there, done that. So if that's what it takes to have the value show up, then fine. But we've got a little bit of work to do until we look at construction financing and the share issuance that would take. So
what was the moment you decided to go down this route? Was it because the exploration wasn't working out, or you decided when you walked into this thing that was the way you were going to play it?
Well, it was interesting. I mean, we bought the property for value. We did some good exploration work. We looked hard. We didn't find anything that was easy. And we were suffering share dilution, spending money on exploration. And Sun Valley Gold started to acquire shares. They saw great value here. And they said, listen, if the market wants to continue to hand us great value, we'll take it. So they ended up buying out of the market and buying pro rata financings. And now they're at 46% of the stock. So that eventually drives you to a point to say, well, okay, there's value here. This is a value play. Let's focus on what we are and what's different.
Okay. Hill of Gold. Obviously, Sprott have taken a bit of an option on that too with the recent deal. Are you going to do anything with that? I mean, surely, because you know less about that, so you're less probably certain about what model you're going to employ there. So are you spend any money on that?
So what we're doing right now is we are spending some money on it in that we're permitting it. So it's in addition to the permits we have. So the full project we've talked about and all the NAV numbers are all fully permitted. We can go tomorrow. Adding Hill of Gold onto the Three Hills pad, that requires an amendment of the Three Hills permit, and it requires a mining permit at Hill of Gold. So that work we are doing, and that's straightforward engineering. In terms of metallurgical test work, pit design and so on, those are actually all done. They've been done for many years there. And there is some exploration potential immediately north of that pit. But again, that would be exploration funding, which would be dilutive at 0.2 times NAV. So we're not doing that work. Will there be some more gold there? Sure. Will it add to the Three Hills mine life? Most likely. But is that something you want to do, issuing shares at 0.2 times NAV when you don't have to? Probably not. So let's do the engineering work to make sure we can grab the value when we turn the Three Hills mine on, but let's not go blow our brains out. So again, very conservative strategy, very engineering and value focused.
Is there any point that you've doubted the model that you've employed?
No.
Good answer. I'd be disappointed if you didn't say that, obviously. But you've got the comfort. You've got the comfort of one, obviously the cash, which is great. But you've got to have a really, really strong view of the marketplace. And obviously, pricing what it's doing now, there must be moments of doubt. And you go, well, we may be sitting on this thing for 8 years.
No, I mean, listen, it's a gold investment, right? Are we doing what the shareholders should want us to do? The answer is yes. I mean, we're conserving value in gold, and this is a business. This is not a game. This is not a speculation. This is not an exploration play. This is not a story. This is a business, and it's a real business about the real value of gold in the ground. And it's sitting in Nevada. It's super safe. We're playing to all of our strengths. The gold's super safe. It's super high margin. It's $700 an ounce to produce it. Whether gold's $1,800 or $2,000, it doesn't matter, except the money that it puts in your pocket. And the capital is $47 million to build it. So, assuming you put some debt leverage on it, it won't be a lot because our shareholders have the money. But you put some debt leverage on it. This is about making money. And whether we make money in 1 year's time or 3 years' time, it really doesn't make any difference. It's about making the maximum amount of money. And so that's how our shareholders see it. And we have the luxury of having 70% of our stock with like-minded investors that can fund the whole thing.
Okay, but talk to me about who's going to be coming into this one. You're going out and telling this story more now, which is fantastic. You've got your stable of solid investors. What type of investor are you trying to appeal to?
So we're looking for people that believe in the price of gold and have a perspective that's beyond next week, Tuesday, right? I mean, that's it.
Those are two very, it seems to me, different crowds. There's the gold bugs who will back you all the way, but they don't want to be sitting around waiting. So that's what I'm saying. You've got, it's a very...
Well, I think, yeah, it's sure. It's narrow. It's a subset, and it's exactly that subset that we want. We want people who have a medium-term belief in the price of gold, medium to long-term belief in the price of gold, and they have the patience to work through and take advantage of cyclical changes. I mean, this is a classic example. The stock price is half what it was. Project hasn't changed. The internal rate of return is still ridiculous, even at $1,730 gold like we are today. So that's the investor we're looking for. And slowly but surely, I mean, there's only so many shares outstanding. I mean, to be really blunt about it, I mean, eventually we'll run out of stupid sellers. I mean, we'll get there.
Stupid sellers in the market. Are there any? Well, look, I'm fascinated by the story. I want to see how this plays out because it's like refreshingly honest, to the point. And I've
imagine that, eh?
In this industry, no, it's very hard to imagine that. But it's certainly definitely an interesting one. I've not heard anyone employ this before, or even discuss it as a thought, let alone try and do it. So I'm intrigued. Stay in touch. Let us know how you get on. Obviously, I suspect the news cycle is going to be a bit slow.
Well, we'll see. I mean, I think as gold starts to move, this will become in focus very, very quickly. And it's not like we have a challenge of being able to raise the money either. I mean, it's 4 phone calls and it's over, right? So when we decide to go, it will go. And we've already done the engineering work on things like detailed cost budget estimates, detailed Gantt charts. I mean, we know exactly what to do by week to put this into production, and it's a matter of weeks to turn it on. So it really is something pretty straightforward.
Yep, simple heap leach operation, reasonably low CapEx. Okay, understood. Michael, I appreciate your time today. I loved it. I love a news story. So
good.
This really helps.
Good. Thanks a lot. Yeah. Well, thanks for doing this, and we will keep you up to date. As soon as we're moving, we'll be back in touch.